How's everybody doing today? Let's go. Gonna get to some more stuff. Economic talk. We're gonna talk some stock market things. We're gonna talk some AMC. Got a whole bunch of stuff to show you today. But I do want to show people and help people understand and be able to explain this to your family or parents or anybody if they're coming at you about financial situation or anything like that. I want people to actually see how bad and how they've held everybody down for the last 75 years. There's some data I want people to see and hopefully understand here. So, had some nice trades on AMD. Let's go. What up? See, that's the thing too when it comes to trading. So, like, a lot of these times when these, if you guys haven't noticed, some really good, things to do on these big companies like that with these AMDs, these S&P companies. When you see they take these hard crashes on bad news, it's let them crash, and then jump the fuck in that day. You've seen it so many times. It'll bottom out. Let it bottom out. I've told my Discord this a couple times. Let it bottom out. Whenever you see these news, oh, this thing had bad news, it always bottoms out that day, and it jumps back up $3, $4, $5. The percentage comes back. So you can always ride those waves. That's one of the things I've been telling people for a long time. Ride those waves. But let's get into some stuff here. We're going to talk some AMC, some news, look at some numbers here. So does the government, like I said, I'll leave up a Thomas Jefferson quote each because this man knew everything. Like I said, he knew exactly what was coming, but there is a breaking point. And I want people to understand we're pretty much getting to that breaking point. Even if they don't break, retail is going to eventually break, which will collapse their companies. And like I said, no matter what, there's no way out of this. They're either going to have too many people indebted and figured this out, or like I said, the way of life is just going to get too bad for people. So it's like they're crossing that line really hard. But let's get into some numbers here. So this does not include today. So after today, I'm guessing you'll make around 20. Usually we make around 23, 24 million on Thursdays for like the last 10 months around. It's been around 24 million on every Thursday. So I would put that number around there. So 1.9, 1.293. So you're starting the month off really, really good. There's a lot of good movies this weekend. I expect to do pretty well too. You got Weapons, Bad Guys 2's coming out, both projected to earn over 35 million. Feeling good on that extra 70 million coming in. So again, throughout the rest of this month, I feel like we're going to end this around 1.9 for the month, which I'm not complaining about that at all. So you could potentially be looking at a 2.4, 2.5, 2.6 quarter. You're feeling great. Like I said, we're trying to get to 2026. 2026 is the year of AMC where you will start seeing profits every quarter. We're going to be feeling good. But now you can start to see why Adam Aaron's talking cash flow positive. But one of the things we got coming this weekend is this Stan documentary. It's only going to AMC. Hopefully, hopefully this does well. Brings in some extra money. But one of the things I did want to show people that AMC is doing that will also bring in extra revenue, and this is one of the things that I was talking about us needing to do, is going to either to these production companies and gaining more money on these negotiations, whether one way or another. So one of the things we found out is when AMC started adding all of these extra ads, so they started generating all this extra revenue, well, it started to piss off all the big guys. So the production company, there's a whole bunch of articles you can read on this, but the production companies got upset about it because, they wanted their ads at prime locations, but they didn't know when people were coming, and it was throwing off too much stuff. So now what AMC is going to do is they're going to re-lower the ad. So basically they're going back to their same amount of ad time. But what they did is they renegotiated with these guys and said, hey, if you want that extra, just like any grocery store would say, if you want the, shelf space, you're going to have to pay the extra money if you want to be in that prime location right in front of their eyes. So AMC is going to be able to generate a little extra revenue on those ads while shortening the ads at the same time. Basically, it was a negotiation tactic, ended up working out. I hope that they do this also with ticket prices. I feel like even if AMC raised it, hey, we need an extra 0.5%, because if you lose us, you lose your number one, theater company. I feel like he should negotiate something like that. Another way to bring in mass revenue for 2026. But like I said, this is another good deal there for AMC. Another good thing for AMC, Warner Brother, and this is what I was talking about. These production companies over these next couple years are going to have to keep ramping up their movie production. They're going to have to keep pumping them out more and more and more. You will be getting back to those $3 billion quarters in 20. I think you might see your first one in 2026, and you could definitely see one in 2027. But Warner Brothers now says that they're going to start releasing 12 to 14 films a year. So this is going to be, like I said, they're going to start pumping. I guarantee you'll start to see other production companies follow suit here. So some more very good news for AMC. Now, more good news for AMC. Their number one competition's been the streaming services, and every time you turn around, these streaming services, first of all, they're losing these production companies money. Now they're all jacking up prices. Well, here's the thing. People are canceling and canceling, so the way they have to survive now is they're going to start to combine all of these things. And now you're going to have all these combined, you're going to have less and less of these streaming services. They're going to shut down the Hulu platform. It sounds like they're going to launch a brand new application with Disney Plus and Hulu. So basically, Hulu's going bye-bye, and this is what you want to see. Less competitors out there. Less competition for AMC. Sorry, my dog was distracting me. So again, more good news for AMC. Less competition. These guys are still struggling to make money. The only one that's still doing pretty well is Netflix, but Netflix needs to get their head out of their ass. Even if people didn't like Happy Gilmore 2, they could have made so much money just popping that in theaters. People would have just paid just to see it. People would have definitely seen that money. I don't care how you felt about it. I know a lot of people were mad about it. But it still would have killed in the box office. It would have done a couple $100 million at least. But I want to show you guys something, because this chart affects everybody's life. And I want you guys to understand, just look at these two charts and be able to understand what you're looking at here. And understand how insane it's been since we've gotten off the gold standard, since corruption's taken over. Why your parents were able to afford 10 children, one salary, a house, all, whatever you did, whatever they needed compared to what we're looking at in the situations that you're looking at now. The interest rates they had, all sorts of stuff that were, what happened when we started letting the feds just print and money and these fucking banks take over, man. I'm just going to show you just how bad it really got. So this right here is your CPI index. This is your average cost, around the nation. And as you guys can see when your grandparents, so we're going to look at this chart, and I'm going to show you, compare it to the median of average wages at that same time. So we're going to look at the wage index, and then we're going to look at the average cost index, okay? So if you look over here at the average cost index, when our grandparents, when there was a gold standard, you guys can see it was flat. It was flat. Things were held. You could only, things are value. When you limit the money supply, that money supply's value, it stays strong. That's the thing. It stays strong. But the second you get off the money supply right here, or the gold standard, and the second you start getting off the gold standard, you start to watch this thing climb. Now, when your parents were growing up, you didn't notice it growing up. You still had the luxury of, low rates, low prices, pretty decent. The price to wage index was still about 4 to 1. It was still very comfortable. But then all of a sudden, these guys started ramping it up. And then COVID came, and then we're going to get into that. So when your parents were running around, so just to put into perspective here. So when your grandparents were doing this, you were talking about 30 points. Everything was cheap as fuck. I'm telling you, it was insanely cheap. The average wage during that time period was 335. Okay, so your price index compared to your average wage at that time was 30 to 335. You're talking like an 11 to 1 ratio. Okay, so their buying power, the average cost was 11 to 1 for your grandparents, okay? Now it comes to your parents' generation. Your parents, Wage lower down a little bit. We had some problems in the economy. Wages dropped, but they only dropped about 313. Now we're going to go over this chart because I want you to look at the 45 years you're looking at right now. So when you go over to your parents' age, you're now talking around 45, 50 into the 60s into when you're growing up into a teenager. It's starting to raise, but it's still very low. The 315 to 60 is still very low. You're still talking 6 to 1. Now it comes to 1995. You're starting to look at the 150, into the 150s. And now let's start going towards today. Let's just skip ahead because I don't want to drag this on too long. But if you start to look ahead now towards today, the average price index is $321. 321. I just saw today. We're going to get into some other numbers here. I just saw today, beef went up to an average of $6.18. Steaks, uncooked steaks, went up to an average of $12. So things are still on the rise. But if you look at your consumer price index now, which will drastically rise here with the tariffs as well, you're looking at 321. And if you look at the average wage, now over 45 years, I want you to listen to this. Over 45 years, your average wage index went from 335 to 371. Okay? Over 45 years, it jumped up 36 points, barely. That's a super insanely small jump compared to what you're looking at on your price index. Your price index went from 30s to your grandparents up to 321. The average price of items has more than 11 times when your grandparents were growing up. Because we got away from the gold standard and corruption was able to print and devalue your dollar. This is what this data is showing you right in front of your face. This is insanity. They have devalued the dollar basically 11 to 1 just from the time that your grandparents were born. So, again, if you look at this now, you're running at a 371 to a 321? 321. You're only 50 points off, which is about 1.2 ratio. In the United States, you have an insane wage problem. You have an insane cost problem. If anybody ever makes you feel bad that's older or any type of way, understand that it is technically 11 times harder than your grandparents, and it's 6 times harder than from when your parents are growing up. Just from them devaluing, just from your government taking care of you. Red and blue. This is why I tell you guys, red and blue don't give a fuck about you. They both print, they both devalue your dollar, they both take corporation tax breaks, they let them extra profits, they let them price gouge. Now, we're going to get into the tariffs here in a second because I need people to understand something that's insanely important with these tariffs. So, again, just another quick look. Your grandparents 11 to 1, parents 6 to 1, you are now at 1.2 to 1. That is how bad this is. This is how they were able to keep wages so low because, again, I told you guys, they were able to convince you that Taco Bell worker is a lazy piece of shit and he shouldn't be able to afford to feed his family. He needs to go get a second job or go to college, which we'll get into in a minute. So the prices have jumped up, but wages have not even remotely stayed close. Now, one of the things I want people to understand, let's talk stock market, let's talk smart plays, let's talk about retirement, let's talk about things like that. So I want you guys to look at this chart because this chart is, if anybody would have just for the last 20 fucking years, 50 years, only invested in the S&P. It's not sexy. It's not fun. But if they only would have invested into the S&P. Look at this. This includes your crash periods. This includes everything else. Because as we've known forever in the history of life, it's just gone up, 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 up. The thing people don't understand is the S&P has always outperformed also all of these hedge funds, all of these investment firms, all of your 401ks. Every year was the S&P outperformed it every year. Now, if you look at this chart here, if you would have invested during this time period, 49 to 55, It went up 487%. Your gains would have been 487% of whatever you've put in during that time period. That's way more than a 401k. That's way more than a retirement plan. You had your year and a half where you went down to 27%. You had a crash. Well, over the next 4.1 years, if you would have invested over that, you would have made 114%. You had a crash. It dropped 27. It dropped 20% in that year, but in the following 3.6 years, it went up 103. Look at these graphs. I mean, whenever one of the things I've done for the last 2.5 years, I've always gotten my trades. I've won, and I've put a little bit, little bit in the S&P, little bit in the S&P, little bit in the S&P, and just left it, and just left it, and didn't even look at it, and just kept doing it, and just kept adding to it. Look at if you would have done it over this 12.3 years here, from 89 to 99, you would have made 841%, 304%, 204%, 121. It's 22%, 22%, 22% average. Where are you going to get those kind of returns? Throughout history, it's been around 22, 22. You're not going to go get that in a CD. If you go get it in a CD, it's locked up. You don't have access to it. But if you would have had it in an S&P, you would have made 6 times the amount and been able to access it through your broker at any point. This is how they have always been rich. This is how they've always gotten ahead. S&P and everything in the S&Ps, it's always been their base portfolio. And a lot of investors say that this should always be your base. If you're sitting here right now and all you're doing is just chasing stocks that people say on the internet, and that's the other thing. You'll see these guys talk about stocks on the internet, and then an earnings will come out, and that stock will. It just happened last week. It will drop. It'll have like $4 drop. Again, buy it on that $4 drop, play it on the way up, and get the fuck out. You don't have to suddenly become part of the community and hold on. It's going to recover, especially when you know that's got a T+1. They're going to attack it on the news. I mean, obviously, be careful with these. It's not 100% guarantees, but I mean, check TAs, check all your things, check your indicators. There's plenty of things. Pull up your TradingView account. There are plenty of ways to look at things. But like I said, if you're still sitting here not learning, guys, that's a huge problem right now. Always find ways to get ahead. I was just checking out Highcroft there. Let's do the S&P. Hold a second. Pull this over quick. Get all this over. Again, it's just it's over the course of time. Right now you're overbought. Wait. Obviously, right now you're at the top of the channel. I'd wait for it to come back down. You're overbought. You're oversold. You're oversold. I mean, your Williams percentage is almost back. It'll come down. You're gonna have a buying opportunity. But like I said, there's definitely ways to watch this. Get in buying opportunities. But again, I just want you to look at this graph and realize how insane this is. Because how many people that would have just been investing in this the whole time over a lifetime instead of all these other things, they would have been millionaires. But just something to think about, going forward, even if you have crash years. It's something where you don't. These guys just print is the problem. They just fucking print. They don't care. But here's what I want you to understand. The S&P will, and all this shit, like Trump, oh man, I'm not going to bring him up in a bad way, but this is what they all talk about. Even Trump just said it the other day. The stock market's going up. They always bring it up. By all these guys. Oh, the stock market's doing great now. The stock market's doing great. It's always doing great. It's always about the stock market doing great under them. As long as they keep raising the debt ceiling, you're going to keep seeing these monopoly type companies pull away. And I want you to look at this graph. The S&P, the biggest top 10 companies, are pulling away from the rest of the pack. It's these monopoly companies that keep on making these record profits, because here's the problem. In the United States right now, when you look at this, and this is why I feel like it's I'm going to keep doing it. Every time I get my wins, I'm going to keep putting the S&P. I'm going to keep building it for a while. When you look at this, what's happening is you have all of these high costs and they're killing off the small companies. They're killing off competition. You're having tariffs come in. Tariffs are killing off the competition. They're overpricing people out. They're making people fire people. They're now producing less. There's now less competition out there. So these monopoly guys are making more and more revenue because now they're dominating the shelf space. Now they're able to buy those generic brands as well. So now they own both. So now they don't give a fuck which one you buy, generic or not. He's still making his cash. It's still coming from the same factory. So these guys will continuously carry these guys for a while. And as long as the United States prints, they will keep doing what they just did. If you guys look at what happened with the tariffs and the semiconductors, what's the first thing that happened? Let's get into this real quick. So the first thing that happens is with these, and I'm going to get into these tariffs. There's good and there's tons of bad with these as well, but there is good. So if you look at these, let's skip over this real quick. So before I get back into the other stuff, so if you look over to here with Apple, Nvidia, all of these guys, they got out of the tariffs on the semiconductors. How? Because they said, all right, well, what we're going to do is, if you look over here, we're going to build some factories, in the United States over the next 10 years. Now, I want you to listen to this because this is very important. They talked about how they're going to pledge $600 billion over the next 10 years. Well, first of all, that's impossible because their CapEx expenditure is $10 billion a year. So they can't even afford to do that, just so everybody understands. They're going to start building, and what they're doing is they pledge these massive amounts. Trump gets a win. The voters feel great because they go, it's $600 billion. But what's going to end up happening, because it's over 10 years, the way that they do it is they go, all right, what we're going to do is we're going to invest like $8 billion. We're going to invest $10 billion a year over the next 10 years, or over the next 4 years. And when Trump goes, or maybe even before then, the tariffs will drop. They'll change to a percentage, and we'll keep building. But again, they can't afford these numbers that people are throwing out there. It's unless they start taking hundreds of billions from their own accounts just to start chucking it in there, which they're not going to do that. They're going to keep adding it to CapEx expenditure. And they still have to have their profit margin, so they still have a limit on how much they can add to that CapEx expenditure each quarter. So, and each year and everything. So again, they're not going to put in $600 billion. But what they are going to do is like this. The new $2.5 billion is going to build new factories in Kentucky. Okay? So they're going to probably put in around $10 billion this year. Like I said, they're going to build about 5 to 10 factories and start production. But what they're going to start doing is they're going to start making smartphone glass here in Kentucky. It's going to bring back 20,000 jobs. But here's the problem. You're pricing out so many other things that I've shown you. Last quarter, the United States, for the first time in a long time, had more job losses. It was since COVID, had more job losses than job creations. So you're losing jobs at a rapid rate. And then they are celebrating these types where they're getting 20,000 back. Now this is good. Now this is one thing I do want to bring up as well, because this is very important, as you can see here. Throughout history, and this is one thing that tariffs don't take into account. Throughout history, these corporations, they find every excuse to raise prices. Now, when that excuse is over, like COVID, they didn't drop the prices down, did they? No. So what's going to happen is they're raising prices due to tariffs. They're going to come back to the United States and do production here, correct? What that means is they're going to say to you, we cannot lower prices because we have to pay American wages now, and our profit margins don't allow us to lower prices back. So while you bring production back to help GDP, it doesn't necessarily help middle class if you're pricing out the rest of their competition. You're killing out more jobs than you're creating in the meantime, but you're celebrating wins on only when you bring back the big ones. But how many small ones did you squash out in the meantime? by making ingredients or, bringing in, things, lumber, things like that, that these companies need that they can no longer afford. And I'll show you there's a whole bunch of companies right now that are really struggling in the middle and smaller groups. So one of the other things here I wanted to show you guys. So, but like I said, back to this. So with all that going on, these S&P guys, everybody jumps into Apple stock because they're all like, oh, they're bringing production back. Again, Apple's just going to come back and keep raking in massive profits. But these tariffs can't last too long. Trump said there's only going to be a certain amount of pain short term, and the goal is to bring back production. But he's got to find a boundary at the same time to where he doesn't kill production currently in the United States. So one of the things I wanted you guys to see here also is Citadel came out the other day. And, they're talking about retail, the retail flow for the last 27, out of the last 28 quarters, retail has been buying very, very net positive. We are very net positive. So retail is buying a lot in these last couple quarters. So I'm hoping a lot of people, like I said, they're doing it right. But it sounds like a lot of these people are chasing a lot. And like I said, guys, don't just listen to somebody on Twitter and go, all right. Because a lot of those times you'll see it tank. And then, like I said, you can watch it recover, maybe play it on the come up. But just be careful. Just be careful. If you want to read this data, it's Citadel data if you really believe it or not. But if you want to come look at this data and like people chasing and stuff, I'll show you this. This is their data report here. Hold on. For retail. But again, the other thing you got to be aware of is when what the hell is going on? Sorry, when retail sits there and they keep on buying and buying and buying and buying. If there's ever going to be a crash, they're going to do it when they can. Oh my God, it doesn't let me. I can't apparently type it into the chat because. Well, that doesn't even make sense. Why couldn't I type that in? Okay, well, apparently I can't type that in. Well, just go to Citadel. Just type Citadel Security Intelligence GMI. It'll pull it up, and then you can read this entire report from them. But this, like I said, this talks about all retail flow. I do look at it every once in a while just to see what everybody's doing. Like I said, you can always make plays off this data as well. But back to this. So again, with the S&P, if you look here, the 10 largest stocks in the S&P make up for 40% of the index market cap. And this is what I was just talking about. It will always, throughout history, it seems like, these are always the guys that get the tax break. These are always the guys that get all the loopholes. These are the guys that they let, like NVIDIA, as I've shown you guys, they let them get away with crime. They let them get away with cooking the books. They let them do their stuff with CoreWeave, shell companies. They're literally giving them. NVIDIA is a crime scene, and they make shell companies. They have all of these other companies like CoreWeave that make shell companies. They put in fake demands. They pay themselves with their own credit. Now listen to this. NVIDIA will take their own credits, pay these shell companies, and then they'll give it to these shell companies. They take the shell companies, pay themselves back these credits, give these shell companies their GPUs and stuff, and then they count it as income. And then they'll count it as accounts receivable. If you look at a company and their account receivable has massive jumps throughout a year or two, that's the first sign of corruption. It's always the first sign of corruptions. That means that you've given product. That means you've given product, but you have yet to receive payment. But you're putting it down on how much they owe you. And you'll sit there and you'll just shell out these credits. And you'll shell, like I said, they shell them out, dude, by the billions. But again, they'll let those companies get away with it. Again, they'll let them bypass tariffs. They'll always find the way. So over a course of period, like I said, even if you have these drops, it's like, well, you've already, over a course of 5 to 10 years, every one of those charts, even if you've had these big 30% drops, 20% drops, it always recovers 200%, 100% throughout history, It always recovers and then some. You always end up making it back. Like I said, it's just something where you just kind of park it. Where did that thing go? Oh my, man! I must have deleted my chart. That's okay. I put it right on my profile. I made sure people understand this because it's very important that people look at. Like I said, this is a very good. If you are going to be an investor, this chart said, look at that chart. Tell me when you've ever seen other, I mean, like I said, you can obviously get the blue chips, but other than blue, this looks pretty damn blue chip to me, just so you know. But that's only 101 year worth of data there. So, like I said, as long as they keep printing, and I'm telling you right now, before Donald Trump is up, because this has happened every time. It's not even Trump. This is nothing Trump related. Before he is up, they will raise the debt again, ceiling again. They've done it every year for every president. They raise it multiple times. So this 5 trillion, like I said, he's going to hit this 5 trillion. I'm going to show you the rate we just spent again. If they keep spending at the rate they're spending, they're going to hit that 5 trillion before the end of the year. Easily. Like it is insane. But let's go on a little bit here. So this is one thing we gotta fix, guys. I have been trying my hardest for 5 years to fix this. This is a huge problem. J.P. Morgan Chase currently holds the largest share of U.S. consumer accounts. Get the fuck out of there. They hold 11.3% of retail deposits. Get the fuck out of there. I mean, they literally paid $290 million for helping Jeffrey Epstein process payments for his sex island. They gave him the loans for the sex island. I can go on. They have paid. All right. You gotta, cut the head off the fucking snake. I've said it forever. Cut the head off the snake. We're feeding the snake. He's got 11%. He's got the biggest amount of food out of everybody. I'm like, dude, J.P. Morgan's the head of the snake. We got to cut their fucking head off. And we've literally fed them. If you know anybody in this bank, educate them on just how criminal they are. Because it's the definition of criminal. Then show them. They are. You guys, you got to understand this. If you're in J.P. Morgan Chase, listen. Even if you don't care about anything they've done, listen to this. J.P. Morgan Chase pays some of the lowest interest in the entire nation to you. They average around 0.0034%. Inflation is at 2.8%. If you have money in a savings account there, you are losing 2% of its value due to inflation. You are not saving money. You're actually slowly losing it. Get the hell out of there. Go into a credit union. They are around 3.2%, which means you are still, your account's actually ahead of inflation. It means you are finally adding money. You got to get out of there, man. You got to get out of there. Now, we went over this tariff prices. So, like I said, so a lot of people don't understand these tariffs and what's happening here. So, when these tariffs come through import, they pay that extra cost, which goes to the companies, which gets passed down to consumers because no corporation's just going to eat profit margins. They're going to just raise their prices. So, that's why people, they celebrate these tariffs and other countries and all these people paying it. But it's like, no, they're going to pass them down to you. And that's why you're, in the end of the day, you will pay the cost. Now, again, if they come back, they're going to use the same excuse to not lower it because they're going to say, we have to pay American wages. Now, one of the things I want to show you is look at this. We just went over this 3 days ago. 2 days ago. It was at 36,805,000,000,000. Yesterday, I can't even imagine what it's going to be today. In 3 days, they added $125 billion to the national debt. So now That means in a total of 4 weeks and 3 days, so not even 5 weeks yet, they have added $825 billion now. They've added $825 billion to the debt in a month. In a month and 3 days. They added almost $1 trillion to the debt in 1 month. That is unreal, dude. That is unbelievable. That is unbelievable. Like I said, red or blue, man. And what this is doing is screwing everybody up in the back end. We'll get into the bonds and everything in a second. But it's screwing up bond prices, treasury yields. I don't know if you guys just saw. Let me pull it up. The auction. So the auction actually it didn't have the demand, and this is the problem because the rates are low. So people they offered these at the treasury rates. They offered their auction results, and all of a sudden they're like, nope. People are like, no, we're gonna buy your bonds at a cheaper rate. You're gonna have to raise rates or give it to it at a high at a discount price because other countries are not buying anymore. Right now, you got basically the public corporations buying your debt. All these people you're giving these tax breaks and things to, they're buying your debt, which is why you keep on giving them tax breaks because it's an engine, you guys, together. Why don't the politicians go after the corporations? Because they need them. They need them to be buying the treasuries. They need them to be in the money market funds. They need them in order to keep fueling this debt because now they no longer have other countries to fuel that debt. Other countries are no longer buying. They're backing the fuck off. This is what I was saying. We're going to get to this point where other countries are going to wake up and saying, hey, you guys are literally a money printing machine just like the rest of us. Eventually something's going to happen. Your GDP's not supporting your spending. Everybody sees it. And that's the thing. Everybody sees it. So that's going to raise the 10-year again on you, which means that your credit card rate, I'm telling you, the average credit card rate by the end in the next 2.5 months is going to be 23.5 to 24%. Think about that. Now I want you to listen to this next part. The average person's credit card. Thank God I have zero credit card debt. The average person's credit card debt is $10,000. And the average rate right now is 21.6%. I want you to listen to that. There are people out there with $10,000 in credit card debt at 21%. How can they ever afford to get out? I can't even imagine. The other thing I was talking to you guys about, which we'll get into this other stuff here in a second, but the other thing I was talking about was this, the buy now, pay later. I was telling it's the same thing. Now what happened is they passed that law, which is now the credit bureaus going after these people. Because I told you guys, it was trillions of dollars thrown into these brand new credit cards that nobody tracked or cared about. And if you defaulted, no one cared. It was a Ponzi scheme. Buy now, pay later. I told you forever. They're just Ponzi schemes. I showed you 4 of them already closed down because they're Ponzi schemes. Nobody cared. The owners came in. They created it. A ton of people borrowed it. So now they had debt. They sold the debt to the banks. They got a whole bunch of income right away, gave themselves millions of dollars in bonuses, and then they knew the company was going to go under, and most of them went under in a year to a year and a half. So they just kept riding it out as long as they could. They didn't give a fuck. And guess what they're going to do? They're going to start over and do it again. But here's the thing. If you guys look at this, you got people that suddenly, buy now, pay laters, they have 30% rates on those. 30% rates, you guys. Her debt ballooned to $4,600 after she didn't do it. Now she's paying $771 monthly payments. So you now have people paying these buy now, pay laters, exploding on them. You have credit cards exploding on them.
Look at this number right here. This is mind-blowing. US household debt jumped 185 billion in one quarter. The United States debt jumped 185 billion in Q2 2025. The total now sits at 18.39 trillion dollars. The United States citizens are in total debt of 18.39 trillion dollars. They have, just like Thomas Jefferson said, conquered and enslaved a nation through debt. Look at that. It jumped 185 billion, and it's getting worse, and I'm going to show you what's happening next. So, at the same time all of this is happening, we're going to jump to places. I got to go in like 20 minutes here. I'm going to go get to that in a second here. Get to that in a second. Where the hell is it? Sorry, hold on 2 seconds. I lost my thing. Oh, I'll talk about that next time then. All right, don't worry about it. So, what are the things that, they're trying to do with the Feds, since they're back to the treasuries real quick, but one of the things that they're trying to do with the Feds, which is very smart and could create a lot of money if they use it right, but they're not gonna, is they can go ahead and do what is called a gold reserve. They basically go in there and they're going to re-audit all your gold and reevaluate it. So they do a gold reevaluation. And what the thing is most of the gold that was put in, the Fort Knox and all the stuff was in the 1990s. So if you go ahead, and that's when it was valued at $37. You could jump it up easily with the price of gold skyrocketing. The United States could make, the Treasury could acquire hundreds of billions of dollars, and then go ahead and pay down some of that, or replenish their reserves. Because as I've shown you, the Treasury's reserves are low as hell, so they need to do something like this, and this actually would be a very smart idea to do. Because like I said, look at the stationary point. $42. So they can go from $42.22 worth to $3,300. So it's a massive jump. We have one of the biggest gold reserves in the world. But problem is, so like I said, it's 282 troy ounces, or 282 million troy ounces. If I remember, we have something like that. It's like 282 million troy ounces. God, now I gotta look because I'm. Sorry, I don't want to. I'm sorry, we're down to 261.5. Apparently, we spent some. So, 261.5, million troy ounces. How many of those millions of troy ounces was in the 1990s at that $42? Well, like I said, if you go from 4222 to 3,300, that's a pretty damn big profit jump. So again, this will hopefully they actually do this. There's been 5 other countries that have done this, and all of them it worked out very well for. So hopefully we do that. The only problem is we'd have to have somebody audit the gold, and is that gold really in Fort Knox? So the other thing I wanted to show you guys in what's happening now is the student loans. So student loans are now crushing people, and you're starting to see massive spikes there. So you now have people underwater with buy now, pay later, and now it's affecting their credit score, so they can't go out and get a loan. You also have them underwater with credit cards. Now their student loans are coming up. Delinquencies jumped up from 0.1% to 10.2% in the second quarter of 2025. A 10% rise is a very massive rise in student loans. Now, I'm not saying anybody's like, oh, I'm glad we're not paying anyone's loans. I don't care about any of that right now. I'm just saying that's a huge jump. That's a huge bubble. You now have credit card bubble. You now have buy now, pay later bubble. You now have student loan bubbles. Now, if you look at this chart here as well, the problem is with these guys. My apologies. Let me pull this up right here. Now, if you look right now, the problem with these college, students, graduates. Look here for men. If you guys look, college degree and non-college degree people that are actually unemployed are the exact same number. Young male college grads are now jobless at the same rate as non-grads. So now they have these massive degrees and they're not finding jobs out there because most of these high paying jobs are at these S&Ps, these good big corporations that are being squeezed out right now by tariffs. They're not hiring. Most people are doing layoffs. I've shown you the amount of layoffs this year is already 830,000. There's a lot of job losses right now. So again, you're now getting to that point. You have all these people going out, they're not finding jobs, and now they're getting squeezed by their student loans, and now they're having massive defaults. So a lot of people say, why even bother going to college? Well, I mean, the point of college is when you do find one of those jobs, just because, I saw that a lot commented. Well, if they're not finding jobs, why even go? It's like, well, when you finally do find that job, it's supposed to pay you more to balance it out. Problem is as I've shown you throughout the median wages, that is not the case. So, as you can see, it's still not the case. The median wage, even with college degrees, is not high enough of a ratio compared to consumer price index to make that much of a difference. You're still getting squeezed. So again, at some point you're going to squeeze out your citizens from being able to buy. You're going to have corporations start reporting bad revenue, which you're starting to see all over the place. But again, you're going to have the S&P. That's why I said over time, you're going to still have S&P getting its breaks. You're still going to have the S&P top 10 stocks carrying it. So again, right now it's one place that I keep storing it. I'm feeling good about. Over the course of the next 2 years, we'll see what happens. But that's my point. You're starting to have monopolies, and you're starting to now crush competition out through the, economically, which is going to create more bubbles, more problems. Now, the other thing on top of this is I do want people to listen because this is insanely important. Please listen to this if you take medication. If you take any kind of medication, and if you have the ability to get a lot, Trump says he's going to start tariffs on pharmaceuticals, which could reach 250% starting this week. 80% of imported ingredients for pharmaceuticals, 80% are imported in the United States. If you just make sure, because to me, I don't like to, health-wise, like, man, make sure you're taken care of. I mean, I know that people need that stuff. Like, you got to get it. So if that's something, if this can save you a lot of money, like, this is going to affect your whole. Because here's the thing, it's not like the insurance companies are going to eat this. You got to understand that the insurance companies aren't going to eat this. And if you're talking, 100, 250%, I'm sure they're going to lower it. But even if they lower it down to 100, it's going to really be a problem on prices. So again, just be aware. You're going to see a pretty decent sized jump when this starts this week, going forward on pharmaceuticals. One of the last things I did want to show everybody. So the other thing, everybody's getting priced out on all these other, debt type situations. Now you're looking at the housing market. The housing market. Here's the problem. Blackstone is pieces of shit. They inflated the market. They bought up all those houses. They're holding it. They're going to keep holding it. And they're just renting everybody out. First-time home buyers now need to make an estimated $126,000 to afford a median-sized home. Listen to this. This is up 50% from 2021. Why can't people afford houses compared to your parents, grandparents? As we went over the wage to index ratio, now you're talking about how much you need to make yearly to even afford one. 126K you need to bring in now to afford a median-sized house. And at the same time now, you have the first time in quite a long time now, you have the biggest record ever in the biggest gap in history. You now have home sellers outnumber buyers by more than 500,000. Everybody is selling their houses. On top of that, I didn't show you guys last week, Personal loan amounts are skyrocketing, and that was the other thing I wanted to bring up. That I was going to show up on with my chart there. That I was going to show you next time. Personal loans are skyrocketing. People are taking out personal loans just to go ahead and get a couple more months of rent through. Like I said, eventually you're going to squeeze out retail. You're going to squeeze out your middle class. There's no these $600 checks are not gonna save anybody. It's they're going to have to either address this or, like I said, eventually you're going to risk a revolt of some type because everybody's already seeing two jobs. Like I said, this should they tell you they've convinced you you were lazy, but again, prices the price to wage index again from your grandparents was 11 to 1. Your parents was 6 to 1. You're now 1.2 to 1. It's not you. It's nothing you've done. Don't feel like you. I know shit sucks. Don't feel like you're doing anything wrong. It's literally your government has fucked you. They've allowed the reserve to print trillions and steal it. And you are going to feel it until, again, we eventually educate enough to wake the fuck up and start to. You have hundreds of millions demanding change because that's what we're going to need. Because, again, they're going to raise the debt ceiling. They're going to print. I will be, again, over these next 2 years, making my little S&P account keep growing and growing and growing. But, again, if you're an AMC, you're one more quarter away from profits. You're feeling great. Shorts, go get fucked. Does anyone have any questions? I don't see any questions in the chat. I was just curious. But again, guys, like I said, any kind of stock advice. Here's an insanely good chart to look at. Here's another one. Again, if you look at the economy, the S&P will always be carried by the monopolies. The monopolies will always be richer and always fucking, even if they're not richer, they'll just fake being richer with fake numbers, pay off people, and they're good to go. Waiting for some earnings run up and dump on earnings. Not sure with the reverse repo being so low. And that's the other thing. The reverse repo shows the liquidity and that, access liquidity in the market. You're down to like 63 billion. These banks are running out, even with them lowering reserves. And that's the problem. When they lower these reserve limits and when they reserve all these requirements, these guys instantly take all that money and go spend it and wager it in bad bets and lose it. And it's ridiculous. They're still, like, dude, like I said, eventually this shit's got to go down. The only thing, looking for GameStop, AMC, GameStop's charts looking good to me. I got some more GameStop this morning. I'm feeling pretty good about what I'm seeing there. It's looking pretty oversold. I mean, the channel's looking good. Everything's looking good in my eyes. Definitely got some more of that. So, I mean, like I said, every GameStop, AMC, these meme stocks, S&P, gold, silver, those are all my base plays right now, and they're all looking good. They're all going to keep going up. It's all nice, steady growth over the years. Again, if you're in a bank, you're losing money to inflation. Get the fuck out of there. Get the fuck out of there. Everyone that's involved in this right here. If you're in JP Morgan Chase, like I said, dude, you're only hurting yourself. Will silver hit at 50? You know what? I did get a whole bunch of silver. I got a whole bunch of silver coins. I hope it does go to 50. I don't see it going to 50 by the end of the year, but I do see us hitting at 43 to 44 at least some point this year. The chart's looking good. Like, you could definitely have a nice move here in silver. But here's the thing. Silver, gold, eventually they're not going to want everyday people. You can already see it with gold. They're not going to want everyday people to be able to buy these because eventually fiat currency's trust will be gone. It's either going to move, and here's another thing. I have XRP. I'm going to keep getting XRP. Banks use it for transactions. It's already getting integrated into Swift. I feel like, when that's off the leash on everything, that's going to be maybe a network, because what they're going to do is they're going to eventually either digitize a dollar, because that's the next way that they can go ahead and keep the charade up. What you're going to this is, if I'm going to be honest with you, the reason I think Trump wants Powell out so bad is because if he can get rid of the Federal Reserve, he can create his next dollar. He can create his next digital dollar. They can go ahead and start, using that digital dollar for businesses and stuff like that. Like I told you, they want. I've said this forever. The rich want their money, and then they want ours, and they're going to want theirs on digital dollars, so they can manipulate it and do any different type of thing to it compared to us being able to be traced through our normal dollar. They're going to still be able to devalue our normal. Like I said, they're going to do something type of situation like that. They can't use their CBDCs. Their CBDCs are getting banned, but those digital dollar cryptos aren't. And like I said, they're either going to see a government type dollar created and them trading on that to try and pay debt off. Like I said, this tariff money, it's great. It's great that you're getting this money. It is. But at the same time, like I said, what money you're bringing in, is it outweighing the cost of what you're doing to the economy? I don't know. I don't think so. And to be honest with you, if the national debt, if you brought in $150 billion in tariff money and the national debt during that same time jumped up $800 billion, again, where did the money go? You didn't put it where you said. You're not going to put it towards debt. If we're just going to keep spending all that tariff money, is it really that great? Is it really that big of a deal? If it brings back 20,000 jobs, but at the same time costed you 35,000, was it worth it? Are these companies going to lower prices when they come back? Or are they going to do what they've always done and just use it as an excuse, find a new excuse? Again, the first thing they're going to say is, well, now we have to pay your guys' new salaries, so we have to keep our prices higher. We can't afford to pay everybody their new salaries in our new factories. We got to pay off our new factories. We got to pay off our new equipment that we needed to come back, so we got to keep our prices high. So again, eventually you're going to, like Thomas Jefferson said, eventually you're going to enslave your people to the point no matter what, because what are they going to do? They have no choice but to keep printing, keep adding to the debt, and keep paying more and keep paying higher rates. And this is the other thing that I've been trying to tell you guys forever. For 3.5 years, I said, all right, guys, get out of banks. Every fucking penny you're going to put in a bank. Put in a money market fund. You're going to get 5%. You're going to get 5% instead of 0.5%. You're not going to be able to really touch it. So you're actually going to save it, and you're actually going to be doubling inflation costs at that point. You're actually going to be making money if you need to have it in some type of thing like that to make yourself feel good. Or gold and silver, if you got the gold coins, when I started talking about gold coins, you're feeling real good. Bought that at 1,700. Banks are going to keep buying. It's already, 34.50 now. By the end of the year, I can see gold at 3,800 easily. Like I said, silver, I can see us easily at about 42.5. But like I said, just make sure you guys are getting assets. Make sure you're getting things are your in places. You don't have to, just only be chasing plays, only stacking one thing. Don't put your chips in all one basket. And I'm not saying, no, oh my God, you say don't buy AMC. No, I'm just saying, if you make money other ways, if you play these other things, you can put that into AMC, and it's not like you're not costing yourself anything. You're using profits instead, and that's what I always wanted to get people at. Use your profits to keep buying your GameStop, your AMC, your meme stocks. Put a little away in this S&P. Keep doing things. That's what all these smart people do. Put them in the S&P. Learn TA. Learn indicators, learn RSI, learn when things are oversold. There's, like I said, there's so much stuff to still be learning, and there's so many people that are still following a lot of people blindly, and I just hate seeing it. So that's all. But again, with AMC, everything's looking great. Like I said, you're gonna have a great quarter. We're gonna have about minimum 2.4, 2.5, maybe a 2.6 if you have a couple movies outperform. But you're going to have about 2.4 on the low end. Got that stand thing coming out. Again, we're going to we just renegotiated contracts on our ads to now we're going to lower our ads back, but those guys are paying us more to make up for the ads that we got rid of. So again, That was a smart move by Adam Aaron. It was the power play by adding all those ads because they probably said, hey, we're not going to pay you extra. So he said, all right, fuck you. I'm going to go and I'm going to add a whole bunch more ads. And I'm going to throw your guys' ads wherever the fuck I want. And if you want the good spots on the shelf, come to the table and pay me what I just asked you. They probably thought he was fucking around. He put him in there, and next thing you notice, they renegotiated that. So again, great news for AMC, more revenue. Definitely not complaining about that one. And again, more production studios are saying this more and more. Warner Brothers is now saying 12 to 14 films a year. You're now looking at an extra nine films a year. That's a lot. It's a lot of money. So again, guys, 2026, you're going to have your first $3 billion quarter, or damn near close to. Profits all year. We're feeling good. So thank you guys. Do you think gold will pass 4,500? No, I don't think it'll pass 45. 3,500, I think you'll pass 3,500 within the next month. I think gold will hit 35.04. I had it pinned at, and it'll drop back down into about the 70s, and it'll slow rise. But you should see that happen in about a month, by what I was looking at on the gold charts and futures and everything. And that's the other thing, man. If you're just holding, again, support your company. Go see a movie. Go see a movie is the best thing you can do. Go sign up for A-List because it's cheap. If you're going to be invested in AMC, get A-List if there's one by you, and go enjoy your company. With A-List, it's pretty damn cheap, man. It's pretty damn cheap. You can go see as many movies as you want. I have, if you have kids, you have a wife, it is worth every penny, dude. It is worth every single penny. And again, every penny you spend there, at least in the end of the day, it's helping your investment. I've screamed fundamentals for years and nobody wanted to listen, but I'm telling you, if AMC starts being able to afford their debt, they start bringing in profit, they have nothing. What are they going to say about the stock? Man, this fucking company's making money and paying down debt. These fucking losers, we're going to, what? Nothing. There's nothing you can say. Hycroft's doing just fine. He said that investment wasn't going to pay off till next year. Everybody's freaking out. He said 5 years. I see this to paying off in the next 5 years is when you'll start seeing returns. So Adam Aaron thinks in 2026, Hycroft will start. You might have a big boom. That was his normal prediction. So again, everybody's just got to relax. See what happens. Eric Spratt's not an idiot. He's not going to buy 22% of a company the guy's a multi-billionaire. He's one of the biggest gold guys in the world. He's not just going to buy this place and be like, well, no. They'll get there. They just need a couple things for mining. They've already found an insane amount of silver. If I was them, I'd be doing the same thing. If I can keep finding more, and if I can keep mining, kind of pinpoint my areas now, and if I can wait for silver to keep going up and up and up, if it goes up $4 more in a couple months, like I think it's gonna, like I said, that chart's looking good. If you're Hycroft, you're gonna be like, all right, if we can keep staying afloat, we can keep doing this, keep affording everything, have money in the bank, get our factory. They needed that new that mining processing thing. They're gonna be able to get that. I mean, again, the second Hycroft starts pulling that out of the ground, they're gonna be feeling good. But again, give it time, relax. But again, I just wanted people to, if you're feeling down on yourself, or if somebody is being down on you for not, like I said, it's not you, man. It's not you. You're not lazy. It's not you. You're not doing anything out of the ordinary. The problem is fucking wage CPI is at 731, while the fucking average index is 321. Again, your grandparents, their buying power was 11 to 1 times yours. Think about that. 11 to 1. That's why they could have 10 kids on one salary. Your parents had a 6 to 1 buying power. If they ever say anything, pull up this chart and pull up this chart. Say, sorry, things are fucking 6 times more expensive for me than they were for you. But thank you guys for listening. Next week, I've been looking. Murph, what are you barking at? We're going to go out, bud. I've been looking at some stocks. I want to show some people some stocks. And then there's a whole bunch of other things I want to show some people. And we're going to look at some market stuff. And then, obviously, some more corruption. You can never stop showing that. It seems to never run out. So, thank you guys for listening. Have a good day.